Gold got to that 2000. These round numbers are really important. So I said that for months now, that 2000 has become support for them. So it's got to build a base around it. And it will. And here we are, as you said at the beginning of the program. Same thing for silver. 30 is that number. So we got to get to that 30. Oh my God, silver's in the 30s. Oh, and then it goes to 29, and maybe it goes back to 28, knowing how volatile silver can be. But 30 becomes the new base. And once that builds, it'll be similar to gold. And once it goes from 30 to 33, it does a 10% move. I mean, you could go from 50 to 100 in a week, and
No,
that's a
yes,
change.
I
And
agree with
I
you
don't
because
think it'd go that fast, but that's the idea.
The commodity sector has kicked off March robustly, witnessing broad gains that have propelled it to its best weekly performance since October. Amidst this surge, precious metals have emerged as the frontrunners, with gold notably poised for its strongest two-week gain since July, surging to reach record highs. However, while gold has been grabbing headlines, silver has stolen the spotlight this week, outperforming its counterparts. DavidMorgan, CEO and publisher of the Morgan Report, emphasizes silver price's dynamic nature. He cites factors such as speculative trading and shifts in investor sentiment as catalysts for rapid and dramatic price movements. He underscores how investment demand and industrial requirements can fuel swift price increases in the silver market. Echoing this sentiment, ABC Bullion points out that silver typically leads the way in precious metal bull markets, boasting impressive average returns of nearly 500% in 5 major bull market periods since the 1970s. The current momentum in the precious metal market, particularly driven by silver, suggests a significant upward move may be imminent, with silver prices already up 9% since the start of the month. Morgan further suggests that once silver breaches a round number level, such as $30, the market would need to build a base around that level. This implies that the price may fluctuate around the round number before establishing a stronger support level. Despite encountering solid resistance at the $24.60 level, indicating a temporary bearish bias, silver is poised to breach this level, paving the way for further gains towards $25 and subsequently $25.50 as the next positive milestone. Morgan's optimism about the silver market's future suggests that the current bullish trend may just be the beginning of greater potential. Join us as we explore DavidMorgan's insights. Stay updated by subscribing to our channel and activating notifications. Thank you.
Everyone that's ever been in the silver market at a nominal price of 50 is holding it a profit. On an inflation-adjusted basis, they're not, but they don't care because it's a number, and that number is 50, and they know that 60 is a bigger number than 50 is. And so even though they might have bought $50 silver in 2011 in April, or $48 silver, it's how many years, 13 years later or whatever, there it is. There's no overhead resistance, and there's, nothing moves like soybeans and silver. I mean, that's back in my commodity trading days, but it used to be a true statement. I don't follow all the futures markets like I used to, but the point is it could really go really fast. And this is where you're going to get this double-edged situation because industry has to have it. And that's 50% of the market. And if the invested community starts pouring in the silver market like they did in 1980, late 70s, you will see competition for the metal. So the investors are saying how high is high. And normally just investment demand alone will burn out. And it will burn out. But the problem is that you have industry that has to buy it at any cost. Because if you're making a $2,000 refrigerator and it takes $20 worth of silver, and silver goes up tenfold and it becomes 1/10 the price of the refrigerator, you're still going to buy it. It's still not the major cost of the refrigerator. 90% of the refrigerator costs more than this tenfold increase in the silver price. And that's true almost across the board. The only time you get into where silver, for silver's sake, will be detrimental to the market is silverware, which is only about 4% of the market anyway, and silver jewelry. And that's kind of a one you got to think through, because if silver really starts going up, maybe the girls will switch from gold to wearing silver because it's moving. It may become a meme where people rather buy silver jewelry because it's cheaper than gold and it's moving like crazy. Well, that one's harder to predict. But regardless, I think the best is ahead of us. I don't know if it'll be a 10-year market. It could be. I really don't know. I do know from, and I'm not a big Elliott guy, but the third leg up is where I got the 90% of the move comes in the last 10% of the time. And as I've already explained, 1979 to 1980, it went up 850%, 8.5 times. Yet it took it 14, 15 years to go up fourfold. It went at double that and so if you do the math, do the arithmetic, it came out, I think it went up 87.5% in 7% of the time was the actual math on it. Does that mean the next time it does that exactly? No. It's the idea that you keep pounding on, which I'm grateful you are, is we haven't even begun yet. Once this thing really goes, it'll go and there'll be people that buy it at 28 on the breakout and it gets to 35 and maybe they're leveraged, maybe they're not. And all of a sudden they are so happy. And, a year later it's at 70. And their wife is saying, well, why'd you sell that silver? Well, you're always on my back about having it in the basement. Well, I got rid of it. Anyway, it'll be a fun time. Once you get to where 30s, the support like 2000 was for gold, those round numbers are important for support or resistance. So when gold got to that 2000, again, I put it in my video updates. I write the newsletter with help. I've got 5 on the staff, and I put it out every month. But the in-betweens I do by video. These round numbers are really important. So I said that for months now, that 2000 has become support for them. So it's got to build a base around, and it will. And here we are, as you said at the beginning of the program. Same thing for silver. 30 is that number. So we got to get to that 30. Oh my God, silver's in the 30s. Oh, and then it goes to 29, and maybe it goes back to 28. How volatile silver can be, but 30 becomes the new base. And once that builds, it'll be similar to gold. And once it goes from 30 to 33, it does a 10% move. And I expect that we could see what I saw in my early days, and that'll limit up moves.
Silver prices are holding steady at around $24 per ounce, exhibiting a slight lag behind gold. The gold-silver ratio remains elevated, surpassing 89 points. In a recent update from TDS, the bank opted to close its silver trade position at $24.64 per ounce, falling slightly short of the initial target of $26 per ounce. Nevertheless, the bank achieved a respectable gain of 6.9% on the trade. Looking ahead, Gali, an analyst at TDS, indicates that sustained bullish momentum for gold and silver hinges on actual rate cuts, with expectations pointing toward June for such actions. Federal Reserve Chair Jerome Powell hinted at this prospect during his 2-day testimony before Congress, laying the groundwork for a potential easing cycle by the central bank. Meanwhile, Morgan underscores the significance of comprehending market psychology, particularly concerning breakout patterns such as the cup and handle. This pattern often signifies a new high and sparks inquiries about the potential extent of further price increases. By understanding these patterns, investors can better navigate market movements and anticipate potential price movements. Let's get back to the interview.
And that's what will happen in both the gold and silver markets, as you said, Jordan, and that's how markets move. So really what Bill O'Neill teaches is to buy on a cup and handle breakout, and usually, not always, that's a new high. So now the psychology is, how much higher is it going to go? And we don't know. And depending on the market conditions, how well it's received, what the float is. Thing about silver is the float is very small and getting smaller all the time because you have this buyback program called industrial usage, which is about 60% of the market now. So it's like a buyback program in a stock. You got this half the market or greater that's being bought back every year, no matter what the market conditions are. So the float is really 50% of the overall silver supply. The silver supply is 1 billion ounces with mining and recycling, and 500 million is eaten up every year by industry. The float is really 500 million. So if you bear that in mind, along with the ability to see value, where silver is probably the most undervalued asset, not just commodity, but asset, because anytime you can buy a stock or a commodity for the price of production or lower and have some patience, you will make money. Otherwise, the whole thing goes out of business. Silver will never go out of business because without it, we can't even be talking on our Zoom link. We need silver for all electronic communications. So I'm still very bullish, but it's been disheartening knowing what I know and seeing diversions in other metals. Not saying everyone should own silver. I mean, I think everyone should, but in the right amount. and what's the right amount. And the idea is what's right for you, maybe 10%, maybe 5%, whatever you can sleep well with. Like if it doesn't ever go up and you bought 5% of your portfolio, would you be able to sleep the rest of your life? And the answer for, I think most people would be yes, but I can't answer for them. It's an individual choice. But the problem is people get educated very quickly because it's not a fast, it's a fast learn. You understand how fiat fails and why it fails and why we're getting scammed by the political and banking sector. And so people go in too large. It's like, oh man, it's inevitable that it's going to go higher. It's absolutely guaranteed. And then they wait for 10 years. And they got all that overhead resistance. Went from 252 to 2000 and dropped all the way down to 1150, right? Now it's got to eat through that 1200, 1300, 1400, 1500, 1600, 1700, got it all the way back to make that that what we call that round trip, 2000 all the way down and all the way back 2000. Now you made your U or your cup. And now your handle, usually there's some strategies at the end that sell around that level. Usually it goes down to the right, which is what you want. And then you break out into what we just talked about. So it probably was a little long-winded, but I love it because it's such a good way to understand in reality how markets work and how to find them and what to look for as an opportunity.
The industrial demand for silver is currently reaching near all-time highs. This industrial demand is a significant factor bolstering the silver market, providing additional support beyond the monetary or investment demand traditionally associated with gold, which also positively impacts silver. How do you foresee this impacting the silver market in the long term? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.